This is going to be the Chapter 2 homework illustration for the Braun 5th edition. Okay, so this is question number 1 in your Chapter 2 homework, and we're going to talk about the differences between a product cost and a period cost, in this case for a merchandising company. So it says, which of the following costs are treated as either a product cost or a period cost? And again, they're using Walmart as the example. So think of, again, your product cost for merchandisers typically is going to be your inventory that you're going to be selling. The period cost is going to be your selling expenses and your general admin. So numbers 1 through 9, here we go. It says cost of leasing the retail locations. That's the selling part of it, of the company. So that's going to be a period cost. Number 2, cost of managers and sales associates salaries. Again, that's your general administrative expenses. Again, that's going to be considered a period cost. Number 3, cost of merchandise purchased for resale. Remember I said earlier that is your inventory. That's going to be considered a product cost. Number 4, cost of designing and operating the company's website. Remember, that's for sales. That's for selling the products. So that's going to be considered a period cost. Number 5, cost of shipping merchandise to the store. In this case, because you're paying for the cost to get that inventory to the actual store, that shipping cost is actually part of the inventory cost. So we're going to be calling that a product cost. Number 6, cost of providing free shipping to customers who buy the product. So this is after you've sold it, so this is going to be a selling cost. So number 6 would be period. So you can kind of contrast number 5 and number 6. Number 5 relates to getting the merchandise to the store. That's product. Number 6 is when you're actually selling it to the customers. You're actually shipping it to them. That's going to be considered period, because remember, period costs are all about selling. Number 7, cost of utilities used in running the retail locations. Remember, that's attached to selling concepts, the selling of the product. That's going to be considered period. Number 8, cost of import duties paid on merchandise purchased for overseas suppliers. This is your inventory cost. That's going to be product. And then finally, depreciation on the store, shelving, and shopping. Again, this relates to selling. That's going to be period. So just a couple basic things. Think of product as essentially being related to the inventory, and think of the period as essentially anything that relates to actually selling of the product. This is question number 2 in your Chapter 2 homework, and again, we're still talking about product versus period versus product, and we're going to further classify the product cost as either number 1, direct material, number 2, direct labor, or number 3, overhead. So we've got basically letters A through H. Let's start with letter A. It says property taxes. 30% of the building is used for sales, marketing, and admin offices. And then part 2 would be of the property taxes, 70% is used for manufacturing. So the part that's used for sales and sales marketing, that's going to be period. So you put that for period. Anything that relates to building the actual product, that's inventory. Even though it's property taxes, that's going to be considered product cost. And because it's not a direct material and it's not a direct labor and it's hard to trace to the actual product, that's going to be considered overhead, manufacturing overhead. Part B, wages and benefits paid to assembly line workers in the manufacturing plant because they're building the product. That's going to be product, and that's going to be your direct labor. Letter C, depreciation on automated production equipment. So if it's production, it's in the factory, you're producing, that's going to be a product, and typically depreciation is all that indirect stuff. That's going to be your manufacturing overhead. Letter D, salaries paid to quality control inspectors in the plant. Think of the plant, that's also considered the factory or where they're actually building the product. So therefore that's going to be a product cost, but because you typically can't directly trace those to the actual product, it's basically you have to do some allocations, you're going to call that the overhead. Letter E, repairs and maintenance on, again, here we go, factory equipment. It's in the factory, it's in the plant, that's considered product cost, and that's going to be an overhead item. Letter F, standard packaging materials used to package individual units of products. Here it is, for sale. So basically you haven't shipped it yet, but you actually are going to use this to it actually becomes part of the product, like a cereal box. That's going to be a product cost, and that's going to be a direct material. Letter G, lease payments on, here he is, admin, administrative headquarters. That's your general administrative. That's going to be period. And then finally, telecommunication costs for the customer service call center. That's period because that typically relates to sales. This is question number 3 in your chapter 2 homework, and we're going to be dealing with manufacturing overhead. I already went ahead and clicked this icon. This icon data is right over here. So let's kind of go through this. This is going to be, suppose the company's March records include the following items. And we want to figure out the total manufacturing overhead. So we've got oil for manufacturing equipment, wood for frames, company president salaries, interest expense, plant supervisor salaries, depreciation expense on company's cars used by the sales force, plant janitor salaries, plant depreciation expense, and glue for picture frames. So again, this is a frame company making picture frames. So to figure out the actual overhead, let's kind of go through these. We've got oil for the manufacturing equipment. That's typically, and if you think about overhead, if it's direct material or direct labor, it's not overhead. So overhead is all of your other stuff. So oil for a manufacturing equipment, that would be considered manufacturing overhead. I'm going to list this over here, MOH, manufacturing overhead, because that's not directly traceable or easily traceable to the actual product. So that's going to be overhead. The wood for the frames, guys, that's going to be actually a direct material. That is not overhead because you typically can trace that to the actual product. So we would not be using that one. That's not overhead. That's a direct material. The company's president's salary, that's going to be a period cost. That's part of the general admin. We're not going to be considered that as overhead. Interest expense, unless they tell you otherwise, and they got to really tell you what that interest expense relates to. For this book, if you ever see interest expense, assume that's going to be a loan on some sort of administrative item. We're going to be considering that a period cost. The plant supervisor's salary, the plant that's in the factory, that's going to be an overhead item, so I'm going to write manufacturing overhead. Depreciation expense on company's cars used by who? It's the salespeople, so that's a period cost. That is not overhead. The plant janitor's salaries, the plant that's in the factory, it's the janitor, that's going to be considered manufacturing overhead. We've got, again, the word plant, that's your factory. Depreciation, that's another overhead item. And then finally, the glue for the picture frames, that's also going to be overhead because that's going to be all that indirect stuff. So we've got the oil, we've got the plant supervisor salaries, we've got the janitor salaries, we've got the depreciation, and we've got the glue. And if you look right over here, that's basically your total answer on how to calculate your overhead cost. This is going to be question number 4 in your chapter 2 homework, and we're going to show you how to calculate cost of goods manufactured. So we've got Robinson Manufacturing found the following information in its accounting records. We've got direct materials used, we've got direct labor. So if you kind of label these, this is product cost number 1, we've got direct labor, which I call product cost number 2, and we've got your overhead, which I would like to call product cost number 3. Now remember, your cost of goods manufactured is simply summarizing all of your product costs. So everything on a cost of goods manufactured statement or schedule is essentially, it's basically all of your product costs. So we're going to need the direct materials, the direct labor, and the overhead. We need those 3. Now, because everything passes through work in process, they have to give you the beginning balance. Work in process beginning balance was 72.4 and ending balance was 87.6. And here's down below, here's basically what you do. So you start with your beginning work in process of 72,400. They gave you that. And then notice, here's your 3 product costs. Direct materials used is product cost 1, direct labor product cost 2, and manufacturing overhead product cost 3. You essentially are going to be adding those to your beginning WIP. So when you do that, you get 1,590,815. Notice that's your total cost to account for. And then once you subtract out that ending work in process, you get 1,503,215. That's going to be your cost of goods manufactured. So again, I'm going to write this off over the side here. You take your beginning work in process, you're going to add your direct material, your direct labor, your manufacturing overhead. Just think of adding your 3 product costs to beginning WIP. You basically get your cost to account for is what they tend to call that, cost to account for. And then what you're going to do is you're going to subtract out your ending work in process, and that's going to give you, I call it your COGM, or your cost of goods manufactured. This is question number 5 in your chapter 2 homework, and we're going to show you how to do cost of goods manufactured and cost of goods sold. And of course, I went ahead and already clicked on the data, the icon, which all the data is right over here. Let's kind of review this just for a moment. Notice we've got raw materials inventory beginning and end of the year. We've got your work in process and your finished goods. We've got purchases of direct materials. We've got direct labor, indirect labor, insurance on plant, depreciation on plant, repair and maintenance plant, marketing expenses, and general admin. So on this problem, we are not going to be looking at the period cost. So if you look at your data, there is some information here that you will not need. So for example, you're not going to need the marketing. That's not going to be relevant because that's a period cost. You're not going to be needing the general and administrative expenses. That is a period cost. Everything else, though, if you go through these, everything else relates to the product cost. Direct materials, direct labor, indirect labor, insurance on the plant, that's like factory, that's going to be overhead. Depreciation on the plant, that's overhead, that's product. Repair and maintenance on the plant, that's overhead, that's product. So basically everything you need here except for these last two. So if you look at the first one, to get the cost of goods manufactured, notice again we need direct materials used. Now sometimes in the problem they give you the direct materials used, and sometimes you have to calculate it. So in this case you have to calculate it. So to calculate direct materials used, you take your beginning raw materials inventory, which is given right there, which is 22,000. You add your purchases, which they gave you of 75. You get your total available of 97,000. You then subtract out the ending raw materials, and that's going to give you product cost number 1, which is your direct materials used. So when you go to do the cost of goods manufactured in this problem, you have to do this first, because you can do it first, but you have to get your direct materials because that's your first product cost. So then down below, when we go to take a look at the cost of goods manufactured, you'll notice that this number, this 64,000, is now going to be included. I call it again your product cost number 1. Now on the next slide, I will show you the full and complete cost of goods manufactured. Okay, so again, you'll notice on your cost of goods manufactured, you got your beginning work in process. Here's your product cost number 1, your direct materials used. Product cost number 2, direct labor was given to you. Now, this product cost number 3, your manufacturing overhead, you actually have to calculate that. So I'm going to help you label this over here. Your manufacturing overhead would have been your indirect labor, it would have been your insurance on the plant, it would have been the depreciation on the plant, and it would have been the repair and maintenance on the plant. So you would have had to add 43,000 plus 7,000 plus 13,400 plus 4,400. That's where you're going to get this $67,800 for your manufacturing overhead. Once you add that to beginning work in process, you get your total cost to account for. You then subtract out your ending WIP. You then get $221,800, which is your cost of goods manufactured. So now to get the cost of goods sold, remember cost of goods sold relates to finished goods. So the next step is to take this number, this cost of goods manufactured, and now we're going to show how this fits into your cost of goods sold, which is basically expensing your inventory. So we need your beginning finished goods, which is 21,000, that's given up here. We're going to add what you just made, the 221,800 gets added to your finished goods. So you got 242,800, which is your available for sale. You subtract out your ending finished goods, and voila, there you go. Cost of goods sold is 213,800. So one more little quick illustration. If you kind of put this, I like to use a T account just to kind of show you what we're really doing here. So if you think about raw materials, you've got work in process, and you've got finished goods. So because everything flows to work in process, what we're really showing you here is this is all about cost flow. So remember, the 3 product costs that go into work in process are your direct material, your direct labor, your manufacturing overhead, which we've already shown. Once we figure out your cost of goods manufactured from WIP, we then transfer that to finished goods. That's essentially what we're doing in this problem. And then from finished goods, once you sell it, once you've sold those finished goods, then it becomes cost of goods sold. So I just wanted to show you a little quick T account illustration. This is really all about cost flow. So again, this is your chapter 2 homework.